To short squeeze or to gamma squeeze? That is the question. All right, welcome back to another video. In today's video, I'm not going to bore you guys by telling you to scroll down and like the video. Blind Dog in my last video left this comment, gave me a little bit of advice and said YouTube watchers have a short attention span, so I shouldn't spend 4 to 5 minutes explaining the like up and thumbs up button. So I'll let you guys decide. If you like this video, hit that thumbs up button. If you don't, hit that thumbs up button and make sure you're subscribed. So let's just jump right into it because you guys have short attention spans. What is the difference between a short squeeze and a gamma squeeze? In order to fully understand the difference, let's understand options first. So, options. When you buy a call option, what does that mean? When you buy a put option, what does that mean? Let's jump into August, okay? So this has some solid volume that we can look at. It looks like 2,739 transactions happened here, and I believe this data is from Friday. So Friday alone, 2,793 people or one person, it doesn't matter. That's the volume. Bought a $9 call. So to fully understand what that means, you have to understand that a call option is a contract between you and somebody who agreed to sell you the stock at $9 a share. Now, typically, if for example, I own 258 shares of CLOV. Using CLOV as an example, if I sold a $9 call, that means I wrote a contract that said, hey, whoever buys this contract, I promise to sell you CLOV at $9 a share, 100 shares. Every one contract is representative of 100 shares of the stock. Now, the $9 call, 2,793 volume. The $10 call, 1,447. The 12.5, 1,199. The 14, 4,189. Now, why am I reading these? Because this is a lot. A lot of transactions are happening here. A lot of contracts are getting signed. In order to understand how this works, you need to take a look at the volume first. For example, if the $20 call had, let's say, 20,000 volume, 20,000 transactions were happening. Remember, each contract, each volume by one is indicative of 100 shares being put on the line, essentially. A gamma squeeze says that if the call volume is really high, right? Let's say this is like 40,000 people bought the $20 call. The person or the institution or the company or whatever who signed those contracts has to own that many shares to give out. Okay? If CLOV price starts to go up and fast, they're going to get a little nervous, right? They have to buy those shares or make sure that they have those shares in order to sell those shares to you at $20 a share. If CLOV goes above $9, they owe you 100 shares at $9 if you bought this call. Some people flip in and out of options contracts. Some people buy the $9 call. If CLOV goes up, so does the value of that contract. Currently, it's $84. If CLOV goes to $11, that $84 will probably be $284-ish. It has intrinsic and extrinsic value. I highly suggest you guys watch some YouTube videos on how to value options contracts. But some people flip in and out of them, but at the end of the day, if it's in the money, it's going to get exercised. That means somebody has to buy and sell you shares at that price. A gamma squeeze, if we just want to hop over to, that's not it. If we want to hop over to the definition of a gamma squeeze, The gamma squeeze happens when the underlying stock's price begins to go up very quickly within a short period of time. As more money flows into the call options from the investors, that forces more buying activity, which can lead to higher stock prices. Investors who purchased call options and sell when the stock prices are high can reap sizable profits, but the institutional investors who had to cover their short positions might see significant loss. So they pretty much have to buy those shares and then give you those shares at a discount, which their activity of buying those shares drives the price even higher. Now, a short squeeze is a little different. A short squeeze accelerates the stock's price as short sellers bail out of their position to cut their losses. Now, when somebody is shorting a company, they are selling you puts, they're selling you calls, they are shorting the stock, and they want it to stay down. Okay? They want it to stay down, but if more and more people are buying these shares and the price goes up, they can't afford that, and they look at it and they say, you know what, we need to exit this position. So then they cover, and the act of covering sends the stock up. So that's a little bit of the difference between short squeeze and a gamma squeeze. Let me know if you have any questions on that. I'm open to discussing. There's a lot of articles that talks about the differences between the two. And there's some key takeaways that you should know. Contrarian investors try to anticipate a short squeeze and buy the stock that demonstrates a strong short interest, which is one of the reasons why people are pouring into CLOV. Now, hopping over to Ape Wisdom that covers Wall Street Bets, Wall Street Bets New, Wall Street Bets Elite stocks, investing SPACs, options, and day trading. The number one talked about stock right now is AMC, even though it is down 27% in mentions in the past 24 hours, followed by GameStop. Seems to have 0% increase or decrease in the past 24 hours, but number one and number two most talked about stocks. Number three is SPY, which is, that's fine. I don't really care about that. Heinz Kraft KHC has spiked in mentions. KHC. I wonder why. KHC. I don't know why. Is there news on it? 1 day, 1 minute. Seems to just be normal. I'm not quite sure. We can look into that. If we just jump right in here. Calls, Monday, catch up, puts, buy, selling, dump, pump, buying, really, play, why, then, open, morning. These are words that are nearby the words KHC. Overall sentiment kind of seems positive. I'm not sure what's going on. We can take a look at that. But after that, CLOV. So CLOV is being mentioned. It's staying on top. It's staying relevant. The people who want this short squeeze, gamma squeeze type thing to happen to CLOV really just want to keep talking about it. I know the CLOV Reddit page is growing rapidly, and there are a lot of people who have a lot of money and who really want CLOV to go places. I don't know what's going to happen there. Swaggy stocks, KHC is up, AMC, Tesla, GME, Wish, Apple, CLN, blah, 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 blah. CLOV's not even on the list for Wall Street Bets anymore. This happened a couple days ago. I'm curious to see how it'll play out. Net short volume did drop from 6 million to 3.6 million. I'm curious to see how that'll affect the stock. I got Ortex, so you don't have to. A lot of cool data here, but if we want to hop over to the short interest data, the days to cover are dropping. It's currently 0.78. I mentioned in one of my other videos, if you look at what happened in that last spike in CLOV, the days to close were at 2.13. But yeah, the short interest change is changing a little bit. Nothing crazy there. Overall, it seems to be mellowing out. Volume has gone down in the past couple of days, which is interesting to note as well. Potential bottom, I believe. If we want to hop over to the stock and take a look at what that's looking like. CLOV opened up green and then just did what it always seems to do. Dies off right in the beginning and then kind of just does its thing. It did have a little spike on Friday and kind of just leveled out and then ended up in the red. As always, But if we hop over to the all-time chart and take a look at where it is currently going and what we can kind of get from this data, currently sitting at $8.20, but honestly, I feel like the lowest I can see this thing go is the mid to low sevens. Anything below that, if we start seeing sixes, that's when I'm going to get really, really nervous. We're currently sitting at 258 shares or so. Yeah, I'm not quite sure where this thing will go. All of the fundamentals point to this thing going up eventually, but I don't know what it looks like in the short and midterm. If we want to follow the money, I always go look at the options and I like to see what people are thinking. Over here, we can see the implied volatility is all above 100% pretty much. People are really expecting and putting their money where their mouth is. People are really expecting this thing to go up. A lot of people think it should be above 9, above 10, above 12.5, above 14, 20, 30 by August. That's what that means. In September, seems to have kind of low volume, but again, people are putting their money on these contracts expecting it to go up. I do have a open put sell. I sold a $9 put for the week of the 23rd, which is this week. So I do need CLOV to go above 9. That way I can just keep my premium, walk away a winner. We're currently down on the premium sell that we did by about $30 or so, but it's not a big deal. We're holding. Worst case scenario, we get assigned 100 shares of CLOV at $9 a share, which is, again, fine because our current cost basis is in the low 11s. That'll just help our cost basis. And then what I'll do is I'll either sell calls and start the wheel. If I get assigned those 100 shares, I'll look at the next week and see if I can sell something like the 15 calls or the 14 calls or anything, honestly, above my cost basis. Just one contract for the 100 shares that I got assigned, just to help offset all of the damage. Again, if you guys have any questions about how options trading works, it really, 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 really helps to understand how it all ties together with short squeezes and gamma squeezes and all of that. Also, it helps you navigate different tools. These are all tools that are available to you, so you can do a lot by utilizing options. Don't be afraid of options. Do your research. Figure out what you need to help you manage your cost basis. So again, let me know if you have any questions. Make sure to hit that thumbs up button, and I'll catch you guys on the next video.